Hey, happy Friday, everybody. This is your market update for January 27th, and it is PCE day. I've been talking about it all week. This is the day that the Personal Consumer Expenditures Report was coming out, which is a key measure of inflation that the Federal Reserve looks at very strongly when making decisions on future rate hikes, monetary policy, things of that nature. As it turns out, the PCE report, the numbers reflected on the PCE report were pretty much right in line with what the market was expecting, what they were anticipating. And as a result, the market reaction in both stocks and bonds has been pretty muted. So I was really hoping for an inflation report that showed inflation was cooling a little bit more than what the market was expecting, but I believe the market's pretty much priced in the fact that it came out right where it was expecting. So on the day, stocks up across the board. Dow's currently up, I think, 49 points. NASDAQ and S&P 500 both up modestly on the day as well. Mortgage-backed securities actually started the day down 6 basis points, but have since then rallied back a little bit, currently up 4 basis points as of a few moments ago. We've seen a couple times this week where mortgage-backed securities will start off the day down and then rally back in the afternoon to end the day positive. We'll see if that happens today. Would certainly be nice to end the day and the week on a positive note with mortgage-backed securities up. So we'll continue to keep you updated on that. In the grand scheme of things, looking at interest rates, I was hoping for some further improvement today in addition to what we've seen over the last week or so. But again, in the grand scheme of things, when we look at where we are today compared to where we were 9-10 weeks ago, significantly better, about 1% lower in interest rates than where we were 10 weeks ago. So I will take it all day long. I anticipate that we will hopefully see some further improvement in the next few weeks. The big hitter next week will be the Federal Reserve meeting, which I believe starts on the 31st, ends on the 1st of February. And of course, at the culmination of that meeting, the Federal Reserve will release a statement and Jerome Powell will have a press conference, and we will all be watching his comments very closely as to what their future plans are pertaining to rate hikes. We anticipate that they're going to hike the Fed funds rate by 25 basis points or a quarter. If they hike it any more than that, I anticipate the market will react negatively in both stocks and bonds. So hopefully that does not happen. As I mentioned yesterday, I think it's like a 99.7% chance the market's got priced in of a 25 basis points rate hike. So I don't anticipate any wavering from that, but we will wait and see. Have a great weekend. I'll see you on Monday.